Good morning, everyone. It's 10 sharp here in Warsaw, so I think we can slowly begin our webinar today. My name is Bartosz. I'm from Microfinance Center, and I will be the host of our meeting today. At the webinar, what can microfinance learn from the EU crowdfunding, which is part of EaSI Technical Assistance project run by European Commission. And let me just say a few words about this project at the very beginning. This project is run by European Commission, but it is implemented by the consortium of three entities. These are Frankfurt School of Finance and Management, the Microfinance Center, and the European Microfinance Network. The second standard implemented by MFR, who are offering ratings and evaluation services of benefiting institutions in Europe. The main services provided under the program are divided into three levels. For the selected beneficiaries, we offer tailored trainings, investment readiness training, institutional assessment, optional finance or social rating. For those microcredit providers who signed up to the European Code of Good Conduct, we provide trainings on the implementation of the code, post-evaluation trainings, and evaluation of the code compliance. And for the wider European microcredit sector, this is the largest dissemination of best practices and help desk part. That includes microfinance workshops and webinars as this one, P2P training, study visits, and help desk. This edition of that of EaSI Technical Assistance project ends in July, but we already know that there will be a continuation for another 4 years, and I'm happy to announce that our consortium has won the open call for proposals. So we are going to continue to provide our services, maybe in a slightly different adapted version, but still the same general pattern. So if you want to find out more about the EaSI Technical Assistance, you can visit our website or contact the project team directly by writing to one of those emails addresses you see on the screen. Briefly about upcoming events with Microfinance Center. I invite you to 2 webinars regarding refugee finance in times of uncertainty, mitigating risks and identifying opportunities. The first one will be already the upcoming Tuesday, April 26th afternoon, and the second part will take place in May. In the meantime, we are also preparing other webinars for you, so please keep an eye on our website or on our social media to follow the announcements. And of course, as usually, I encourage those of you who still are not our member to join our network, visit our website to see what benefits are for being a member of our network. Also, I invite all of you, those who didn't register so far, to meet us at our annual conference. This year it's going to be in Istanbul in the end of June. You can see the link to our conference website. There's an agenda available over there, also the registration form and all necessary information. I just will add that we've prolonged the early bird registration deadline, April 26th, I believe, or at least by the end of the next week. So just go to the website. You still can register with a discount and do it. It's worth it. So briefly about few rules of this webinar. We are using WebEx tool. Those who are not familiar with that tool. Just please bear in mind that you are muted upon the entry and you cannot unmute yourself as a participant. So if you want to take part in this discussion, just please type a message in the chat box or raise your hands using the raise hand button. So I can unmute you. The webinar is recorded and the video will be available both on MFC and EaSI TA dedicated YouTube channels and websites. And going back to the topic, what can microfinance learn from the EU crowdfunding? Let me just introduce our main speaker today, Oliver. Oliver is an executive director of Eurocrowd with a huge experience in venture capital, microfinance, technology, and social entrepreneurship, both in commercial and non-profit sectors. Oliver, can you hear me? And can you take the floor from now?
Hello. Yes, I think you can hear me as well and see me. Thank you very much for the introduction. Welcome everyone to this webinar. Bartosz asked me to prepare slides. I had hoped we would have a lively discussion. I still do. So we shall see how this goes. But maybe to frame my thoughts a little bit, I will share some slides once Bartosz removes his, and then we can quickly go through there. I will tell you if I can see you. You have to make me presenter.
Yes, I passed the presenter role to you. Okay. Yes, okay.
Okay, so I will put this into a presentation mode. Good. So I currently don't see chats. I don't know if you raise your hand, but Bartosz will, and then he will shout and interrupt.
Yes, I will keep my eye on the chat box, so don't worry about that.
Very good. So you already introduced the webinar, EaSI Technical Assistance. What can microfinance learn from crowdfunding, basically? That's a good topic. I think it's actually timely as well. So let's dive into it a little bit. First, about us, we are a think tank / trade association with a small team with an office in Brussels, but team also based around Europe. We have a up and down changing number of members, around 70 crowdfunding platforms, but also other stakeholders from law firms to regional authorities to consultancies and universities. So quite a mix. All organizations, of course, they have an interest in different types of crowdfunding. We also organize conferences. So what the MFC does just for crowdfunding to some degree. I don't want to talk too much more about us. Maybe as a backdrop, I have a degree of the European Microfinance program. I was in the first consort in 2006. I don't say I learned a lot, but at least I passed through it, and I worked a bit with the Microfinance Information Exchange at the time into the 2006-2007 in Washington, D.C., and Action as well afterwards on microfinance. But I think far from a microfinance expert, and I haven't really kept up too much either. But maybe the basics I still understand, and this is where I need your help as the audience as we go forward. First of all, I assume you all know what crowdfunding is, so let's still kind of find a common base. It's basically a practice of funding an idea, a project, a venture, with small amounts of money from many people. So simply done, existed before. You use similar tools in microfinance as well, or you brought some ideas. But crowdfunding does it to raise money for a specific project and over the internet. That's I think the key aspect here. The connection between the parties is digital, and so I think that is where we also want to focus a little bit on today. And then we see that crowdfunding is providing different types of benefits. Some similar than in microfinance and some dissimilar. let's quickly go through this as well. We can roughly make a differentiation between 4 types of crowdfunding. One would be donations. There's no material or financial return. You can basically align it with a non-repayable grant that might be given. Then we have a reward-based crowdfunding where people support financially an idea project, but will not participate financially in this, but receive a product, a service of nominal value. So the actual funding is higher than what you receive back. It's a bit more, a bit stronger than a just pure donation. It's a thank you. It could also be a pre-sales, so on a commercial level, introducing a product. Both of these are not necessarily what microfinance is about, and so we don't really talk about them. Really interesting is, of course, lending. Lending money, providing loans to crowdfunding does it to consumers as well as to business. And then investment, so financial instruments under capital market law, maybe bonds, might be direct investments in equity or mezzanine structures into business. Important is that, that's the note on the bottom of the slide, we have a European harmonized regulation in place for crowdfunding using lending or investment-based structures for businesses, only for businesses, not for consumers. This has been signed off in the Parliament in 2020, entered into force late 21, and we have a transition period until the end of this year, which may be extended, we don't know yet, but otherwise until the end of this year, then all service providers offering crowdfunding, lending or investment to business would have to operate under such a license across Europe. So this will reduce the fragmentation of business models and how this all works. And I would hope that we can look a bit at this, because this is where the real opportunities are right now. There is also ongoing discussions on the Consumer Credit Directive 2, which will and is intended to also harmonize loans or lending to consumers. So what usually is called peer-to-peer finance. So crowdfunding using or crowdfunding addressing consumers with loans will be harmonized. Until then, we remain in highly fragmented markets. There is no country doing the same thing than another one. We have had markets where basically the border patrol was in charge of oversight of these platforms, and we have other member states where this is treated as a banking activity and need a banking license. So it's very difficult to. I saw the question there. Maybe we can come to this in a little bit, but I didn't want to talk too much about regulation. So, but it's important to see that when you talk about crowdfunding, first we should talk about crowdfunding for business, and the lending part we need to see how this develops and how it is being implemented with regard to consumers. I will touch upon the regulation a little bit in my slides, but we can go into more detail as far as I can answer it. Just microfinance, I took a random quote of what microfinance is from ADA, European Microfinance Institution, quite old, quite big. I think most of you will know what this means, but microcredit, usually we talk, when we talk about microfinance, microcredit, so we talk about credit, is a small loan. And usually this is, or from the intention, it was for consumers or individuals. Of course, especially in European member states, maybe, and some other states around, we find that consumption or financing consumption and income fluctuations is not everything. They also need some support in starting a business. And so here, potentially, the new regulation that exists for crowdfunding could become interesting for microfinance at some point as well. But microfinance institutions actually offer financial services to individuals or startups, according to ADA. So I think this is important. The ethical focus on alleviating poverty and reaching the poorest segments of the population does not necessarily translate into crowdfunding, though it can, but it's not an inherent part of crowdfunding, but it's an inherent part of microfinance, which I think we need to keep in mind when we focus on your clientele and what you can learn from crowdfunding. This may be having a quite important impact as well.
I will just add that this is the possible, area of competition, or if you want to present it other way, of cooperation between crowdfunding.
Yes, I would not say one or the other. Quite frankly, if you look at the last sentence here, there is right now no let's say relevant crowdfunding platform that competes in this market. It may change, but there is no competition as such for this particular market. There is of course competition for capital, but even that is not right now the case, or rarely the case. So I try to create simple graphs to kind of, and this is where you need to correct me, of course, because I try to simplify it, and every business model is differently. So you have an MFI in the middle that is basically a non-bank credit institution under national laws, depending on where you operate. That's where the regulation will apply. And the MFI consists of one or more offices. You have management information systems, you have loan officers, and you basically have a personal client relationship with your borrowers in most cases. So the loan officers know their clients, go to their clients, go into the cities, towns, villages where they have their work, and basically have face-to-face contact. As we already said, it's usually consumption, income, volatility, businesses that is being addressed here, but for the poor or those that don't have access to the financial services industry otherwise. So very specific clientele, even though the idea behind consumption or business, we can also see, of course, another finance, we can also see another financial services areas, including crowdfunding.
Yes,
and on the yeah,
I will just jump in on loans are rather concentrate on the potential businesses for small businesses and small startups.
yes.
So this is a trend right now.
Very good. Then it's even more. Let me know if you can't hear me, because I had a few issues with the connection right now. But so on the left we have the capital providers. In your case, these are institutional players. I would say banking, capital markets, EIB. There is other refinancing, for example, crowdfunding platforms or platforms that operate similar to crowdfunding platforms such as Mintosh, that help to provide capital into the microfinance market. So there's a variety of say incumbent players that you have an institutional relationship with, where you sign contracts, where you deal with them. There's a due diligence process as it always has been. So you are quite traditional in how you're set up. That's not bad. Don't get me wrong. Let's look at crowdfunding. We already looked at it earlier on. Just here, the definition from the European Parliament and the Council of the European Union as part of the law that they now have agreed on. So here we see crowdfunding is increasingly established form of alternative finance for startups and small and medium-sized enterprises. So we see the relation to microfinance. There is some competition potentially. It is an increasingly important type of intermediation. So crowdfunding is an intermediary. It's also very important. And the crowdfunding service provider does not take own risk, but operates a digital platform open to the public in order to match or facilitate the matching of prospective investors, lenders, and businesses. So here we see, and this is I will explain a little bit as well, this is where the Commission and the Parliament and the Council have their vision clearly set for crowdfunding. So I try to recreate this little graph here, and it's a bit busy, but let me try to outline some of the ideas. So in the middle, the CSP is the crowdfunding service provider. That's where otherwise the MFI would be, and the CSP is an online business. It's a platform. It's a marketplace that operates online, and if you want to reach it, you go to the website. And on this website, it offers its services that are related to matching investors with, business in order to finance them. There's the possibility to add additional services as long as they are related. So we could here see, of course, certain investor information services, accounting support, and so on, to either clients on the left or on the right, where the CSP can add additional value within the license of the CSP. Some of these activities may need a separate license as well under the new regulation. So you have a setup with the core business being basically a broker-dealer operating online, but being able to add to this additional services that are relevant to your business. On the left, we have the capital providers, citizens. It's crowdfunding, refers to individuals, but also institutional investors, also government, and also the grey capital market. Institutional investors have been playing in this market for a long time, but not necessarily on to a high degree on the market for SME finance. So there's very good examples as well. And they were always looking for high returns and so on and so forth. But we have hedge funds, we have specialist funds that operate here and invest into crowdfunding. We have governments or let's say government funds that are co-financing some transactions. I won't go into the detail here. That's a slightly different thing, but this also exists. And then we have grey capital markets. So that's basically venture capital fund, business angels, and other funds, that operate under or outside of the capital market regulations, and they also act as capital providers into crowdfunding. Now, be realistic. That's not every crowdfunding platform. That is a few, and some business models are better for this than others. But these are our capital providers, and they have a broker relationship with the crowdfunding service provider. And the crowdfunding service provider is also a broker to the business, so it's end user. And they provide loans, working capital, and so on to businesses. They provide business investments. They invest also through other tradable securities. So you could have bonds issued through crowdfunding platforms. And they can invest in illiquid or non-tradable assets, especially here, think of real estate or energy installations, things like this. And this is specifically being written into the regulation to enable that crowdfunding is having a broader reach than just business activities, but that can also allow transformation when we talk about energy efficiency and so on through investment from citizens. The important part is that the structure exists so that citizens can invest, and a CSP license holder, a crowdfunding platform, would always have to involve citizens. You could not use this license and do not have individual investors on board. And so we see in the middle of the CSP, they basically broker a direct contractual relationship between capital provider and the business. There is one exemption to this. I'm not sure if I have a separate slide for this. Let me see. Yes, I have a separate slide for this. So we can talk about this in a minute. There is the possibility to use special purpose vehicles for some investments. Special purpose vehicles are businesses that are set up only transfer the money into an illiquid or non-tradable asset. So here, if you want to think about a building and you want to sell the building to many, many investors, nobody can actually take ownership of a specific part in this building. So there's a company structure being created that then will transact this investment, and you will, as an investor, own a part in this vehicle, which then holds the assets in the property, so that you can also exit your investment into an illiquid or non-tradable asset. But this only works for investment and not for lending. So for microfinance, not that important. And there is the possibility to make it easier, for example, for institutional investors to co-invest on your platform through linking in a fully regulated fund manager. An IFMD fund, and after European regulation, would be able to collect money from institutional investors, from banks, from the EIB, with under agreed investment conditions. And then this fund would basically allocate funds according to its pre-agreed investment conditions to all the transactions that happen on this platform. So if you think of a crowdfunding platform that may finance certain businesses, from different sizes, the fund could say, we only want to, invest in those transactions that have a certain size or a certain risk band or operate in a certain market, but not the other ones. So this is where they would co-finance next to the citizens, and the fund actually can be managed by the crowdfunding platform. So this is a really important tool to scale operations at some point. That of course comes with cost as well, and its a possibility is written in there. So for microfinance institution, this also enables, basically some of their old capital providers to include in some structure like this. Important as well that why the crowdfunding platform can do everything that they want to do. They don't have to, so they can work with third-party service providers. This would specifically be, for example, payment services. We're talking here about KYC and so know your customer rules and the whole management and holding of client money. This would usually be done through a third party that is fully licensed. There's a number of actors on the market that offer these services, also specifically to crowdfunding platforms. And those kind of services would be integrated then through a contract. But the platform could offer these services on their own if they want. And there are platforms that have this license, because under national rules, that was actually a way in some countries to provide these services. So I think here we see there's a clear contrast to microfinance already. This is basically digital. The investor goes to the platform online and looks at opportunities online, and as does the borrower, or that goes to a platform and applies there and says, I need money. And then the platform itself brokers these investments. So, and that sounds potentially a lot of work if you think about a lot of transactions. If you think of 100 transactions a day and you are an investor, then you would have to click and look at all these profiles, decide where you want to invest. And maybe for a loan, that is not always that interesting. For an equity investment, you might have a preference in what type of business you want to invest in, where you want to hold the assets, because you become a co-owner of the business. So you potentially want to look at all the business plans and at the people behind it, and may only invest in those companies that you really like. But in some cases, on the lending side, this is not the case. The investors rather want to allocate money according to their risk expectations. And where that is the case, and that's minorities for now, but where that is the case, there is another possibility, which I think can also be interesting for microfinance. So here on this interaction, the investor would have to look at the crowdfunding platform, identify individual projects that they like, and invest into each of them individually. Now, you can imagine that a hedge fund doesn't really do this. This is why we have this IFM structure already here on this level. But there is another level also for citizens. And this comes here. It's the same setup, but here the CSP basically turns into a non-bank lender. And the capital provider basically receive investment advice from the CSP. It's the same regulation. The difference is that in the previous model, the business that is seeking capital has to publish a key investor information sheet. It's drawn from the prospectus regulation. When people go to the stock exchange, they have to publish a prospectus, which is a certain way of formulating your vision and expectations for the business. So like a very short business plan with key figures. This needs to be done here as well. This is capped at 6 pages, so it's not a huge document, but every business that wants to raise money has to provide this to the crowdfunding platform, which will have to submit this to the national regulator in the European Union. So this is also for lending the case. In this model, the platform, the crowdfunding platform, issues this key investor information sheet with regard to its own services. And so therefore the liability for the transactions that happen here lie with the crowdfunding platform. In the previous setup, where the individual transactions are just brokered, the liability for the information remains with the company issuing or asking for the money. So this is quite important. Here in this model, the crowdfunding platform becomes, if you want, a lender that collects capital from investors and does a certain type of portfolio management that they can, to a limited degree, create, for example, risk bands and give investors the option to allocate X amount of money to a certain risk band in a certain business or geographic area. And the crowdfunding platform then would automatically allocate this into a portfolio of different transactions. So here we have a different model. This also works then with the fund attached to it. So this is for me, where I see when I look at the difference between crowdfunding and microfinance, it becomes clear that crowdfunding is within the regulation of this law to be seen as largely digital. Yeah, not all the services are digital, and if you meet a crowdfunding platform, you will see they're not all that techy yet. But it's clearly seen that this is supposed to kind of speed up certain transactions and make them more transparent and easier to manage in order to reach scale. Did I put the wrong one yet now? Yeah. So for consumer loan, I have the same, but I already mentioned we don't want to talk too much about much. This is for now regarding to national laws and unregulated under European law. So here we don't want to do too much about, but this is basically a service relationship in most cases because it's not regulated as a broker-dealer, and there's a direct contractual relationship between investors and the consumer, and it becomes or can become quite messy. Where there is relevant regulation or rules, like in the UK, this has worked quite well, and where there hasn't been, it hasn't worked at all. So we wanted to focus on business. I would say we can maybe skip this a little bit and just look at a few bullet points, and there might be more that we can discuss, and where I would hope that you also have some questions on opportunities for digitalizations within crowdfunding, but I believe also for microfinance, maybe not for every microfinance platform, but for some. And the opportunities here lie.
If you let me just jump in here again about the digitalization and presence in the net. Well, due to the COVID pandemic, as actually probably almost every single part of our life, MFIs are also affected by the remote work and the need of providing services online. And it seems very clearly that after the this change. There is no way back to only on-site services. So in general, the microfinance sector is right now rapidly digitalizing itself. But of course, yes, keeping in mind that the target audience of microfinance services, there still need to be some space for the traditional customer service and the in field, work. So yeah, the digitalization part is actually one of probably the most interesting part for our participants, because all of these tools are being also developed for MFIs, and all of these easily accessible websites with microfinance services are the main topic, are very on the very high interest of the microfinances institutions right now. Yeah. So.
Yeah. Okay. I mean that is probably you know, a good result from the pandemic. I know that for some it might be difficult to reach their clients through digital means. I would wonder if there is a risk that microfinance MFIs institutions come to the point where they would infringe of the regulation of crowdfunding and would have to have a crowdfunding license to operate their services. I mean, they would have to involve citizens, investors, otherwise not.
Mm-hmm.
But they would have to see, because there is no real regulation yet that, so it's difficult for me to also navigate this.
Yeah, that's true. The same situation in MFIs. Different countries have the better regulations for MFIs. Other countries don't. So this is a topic that differs from the actual geographical,
Yes. Look, we've had this for 10 years, and I'm glad that we don't have it anymore very soon. And I think it will be good for the sector. And I think it would have been good for microfinance as well to have something. So maybe there is possibilities to also look at how this can help and the sector to learn. So in the crowdfunding platforms, when they started, were not super digital either, right? And even today, if you look at crowdfunding platforms, many have physical networks, physical events. They connect with business angel networks, with networks of investors. They connect with networks of startups and companies in order to source their transactions. And so for many crowdfunding platforms, there is still a heavy face-to-face business aspect here as well. It becomes less when you reach a certain size and maybe become attractive to a broader audience. This is what this regulation is, of course, doing by enabling cross-border transactions. So the physical aspect will be less relevant, because this regulation says you as a Polish platform should have investors from Finland into businesses from Cyprus. So the physical aspect here is expected to be diminished. The current situation is you will have a platform from Berlin, and the majority of the transactions will come from a geographic proximity, maybe not even the far south of Germany, depending on the size. So you have a proximity. People have the chance to meet people, and they will do this. They will run physical events. They will have investor meetings. This is how crowdfunding platforms operated for now, still in this level. This is changing with this regulation. You now have to, as some large platforms do, digitalize everything. Yes, because your clientele is in 27 member states or more. So the easiest ones, of course, I mean, when we look at this, if you would go for the portfolio management aspect, if you look at the expected number of transactions that you would want to reach in order to also manage the cost of setting up a platform like this, this would be automated. Yeah, you would have a portfolio management system that basically uses KPIs within your system to classify transactions into certain risk bands, and that you as an investor would go to the website, make a few clicks saying this is where I want to invest, and the system would automatically identify the right transactions. This will not be done physically. Nobody will go through a spreadsheet here. The transactions happen within 2 to 3 days on some lending platforms. If you have 2,000 investors, you're not going to do this manually. So here, the absolute important, the whole back office will be digital in the future on these platforms. It may not have everywhere had this functionality, but it is. We have search functionalities. You need to have your complete portfolio online. Investors need to be able to search every type of transaction unless you have portfolio management. They want to maybe only see certain things. They have a certain investment interest. That needs to be catered for them. So again, all your information is digitalized and it's available in search functionalities that allow investors to scan all your opportunities. It might be 10, it may be 200. You don't know what you're doing on the lending side, often more, that they can go through this and make an adequate decision. And that means, of course, you have to have push notifications. Well, you need to inform investors that have a certain interest about opportunities. Yeah. So your system, again, keeps them involved at all time. This becomes, as we know from social media, you're always being kept on track. This becomes a fintech, less of an old style business as it has been also in crowdfunding for a long time. For investments, not for loans, there's even the possibility to operate a bulletin board that is short of secondary market. So for investors to sell their participations to each other. There's rules how to do this because the platforms need to be sure that they don't compete with other regulated entities. So this is a limited opportunity, but it exists. And it means, again, there has to be relevant interaction for investors to sell their investments to other investors. All of this runs electronically. All the presentation of investment opportunities must be electronically. Investor relations must be electronically. If you consider that some of these platforms have way more than 100,000 investors on their platform, this is all fully automated. KYC, even in the regulation, the onboarding process is digital. There is no physical form that needs to be filled in. Investors need to be made aware of the risks when investing in this at several stages within the website. They need to fill in forms. This needs to be tracked, and they have to repeat this after a certain period of time as well. All requires you complex back office operations. Due diligence, yes and no. So for some investment opportunities where it's for participations, there will still be normal due diligence. There will be, the documents being sent will be analyzed. They will look at this. On the lending side, basically it's a credit scoring that they apply, similar to what banks would do, similar to, what an MFI would do if you have the relevant data. And this will be done electronically. People submit their investment requests electronically with all the relevant data, and the platform can check this, and then within 48 hours, you may have a loan. Payment and client money administration. Again, this is often a third party. It's all digital. Data and performance tracking, something that platforms so far have done for themselves. Now, there's at least a minimal requirement to report or to the regulators according to specific requirements. This will be done automatically as well. I mean, maybe initially with a spreadsheet, but depending on the number of transactions every platform is operating, this will not be done manually for the long run. The complete back office is digital. We've seen platforms playing with blockchain to map the processes in the back office on the blockchain to reduce the workload of people. And we've seen platforms on the lending side to tokenize transactions. So after the investor invests, the investor invests in fiat currency, in euro, and then everything that happens afterwards will be digitalized with a tokenized transaction internally. So here again, it's a process that we will see many more platforms moving into over the next few years, in order to be able to deal with the amount of transactions that they at least all hope to be able to do. So this is where crowdfunding is going. It's not a simple path, and I think where I don't know how much microfinance institutions are able to build on this, or also adjust this, because it costs money and it needs a relevant scale as well. This is maybe for you extremely interesting to do, to just watch the crowdfunding market very closely. We had in some member states up to 100 platforms, and we should expect that many of these disappear because the cost will be too complex to have regulatory compliance and build a system that can be scalable. We may see platforms joining across member states as well and become bigger entities. And so here there will be a lot of change. And I think this is where also microfinance can learn from success and failure that will come, of what might be the benefits really for the market. So this is my thoughts. I don't know how far microfinance institutions are digitalized. I assume it's client facing, so for borrowers that they can, submit their information electronically. I don't know how much your back office then is digitalized, if you already do this, and how how you work with your investors, if there are more opportunities to also digitalize this and potentially also reach a new form of investors, like with crowdfunding regulation possible. So that would be, I think, points for discussion that we can have here. I don't know if there are any other questions other than regulation at this point.
No, we don't see. I don't see anything in the chat box, but just let me check with the participants list. I thought I saw a raised hand, but I don't see it anymore. So yeah. I also encourage you to raise your hands and join the discussion in the chat box. But Oliver, since you mentioned it, yes, there's a very different level of digitalization between the MFIs, but the general pattern is obvious. Everyone thinks about digitalization. Everyone tries to create internet tools. The websites are adjusted to the current, trends. Creating mobile apps for loan applications for customers. This is something that is going on around the microfinance sector for a while. But I was actually kind of interested in this perspective of attracting investors using the experience of crowdfunding platforms. I don't know, maybe just could you develop? Could you say something more about that? Because this sounds very interesting, but I don't know. Do you suggest that the microfinance institutions should look for investors on the crowdfunding platforms, maybe as a project, as a potential clients of such a tool, or how do you elaborate on that?
Yeah. So here it becomes a little bit complicated. So there's two ways, of course, of thinking how can now microfinance benefit from crowdfunding, other than looking at how they deal with certain issues, and that's of course access to capital. And there's two ways, of course. Could microfinance realistically manage retail investors as as a co-investor for their transactions? That would be one thing. And the other question could be, could microfinance institutions use crowdfunding platforms to raise capital for their transactions? So for the second one, this I think needs to be discussed over time a little bit more potentially with their lawyers as well and your regulator, because the rules for crowdfunding platforms, the regulation is quite clear that it is designed to foster direct investment. So the company, the business that raises funds through crowdfunding is the company that uses the funds. It's not a fund that passes them on. It must be for direct investment. So if you look at a microfinance institution that would be interested in, for example, refinancing a portfolio, that would not be covered. This should not be done. But here, and this is where I'd say let's be a bit patient and see how things develop, because we have the rules written for basically capital market laws, and then there are adjustments so that limited liability companies can also fall under this, because in most member states, limited liability companies do not fall under capital market law, which is then called an admitted instrument. And they're not in every member state, the authorities will admit them. So there's quite a bit of confusion right now. But we have this tool of the non-transferable or illiquid asset. And so there could be, at least in some cases, the possibility to actually consider certain structures as illiquid and use a company structure to get this financed through crowdfunding. But this is certainly not initially wanted, but it might be possible. And the use of the special purpose vehicles, when and how they can be applied, we just have this regulatory text right now, and we have a Q&A from ESMA trying to guide member states, but we haven't got any case experience yet. I expect that there will be some smart legal advisors that will come up with ways how you can use them to maybe do transactions that initially were not necessarily wanted, but might be beneficial. And this could very well be for refinancing microfinance. So for now, that I see difficult to get funding unless you as an institution say, we need money to expand our operations. We need money to digitalize our system, and that we raise through crowdfunding, take a loan and repay this, that you can do. But refinancing a portfolio, we need to see. To onboard investors yourselves, citizens, of course, there's nothing that would keep MFI of doing this, maybe other than moving into a completely different business. Yeah, because your business is dealing with your clients on the ground and providing loans to them, and your fundraising is kind of institutional, and you sign, I don't know how many institutions to fund your activities, but maybe it's 5 or 10, and dealing with maybe 100,000 is very different. So this would really mean a change in business model and understanding of what you want to do. But I think this is certainly possible, and I believe that there are opportunities going forward also for potentially combining existing crowdfunding platforms with MFIs, where this may make sense. So you could say,
yeah, that's what I just thought about. When you mentioned the business models, we are talking here in the sector about the ecosystem-based business models, where you have different kind of services around the particular type of a client. For example, that the platform, for example, online platform that provides different types of services, and maybe MFIs would coexist as alternative services on such a platform and cooperate with each other, with providing different products, actually, because there are some slight differences between the products that are being provided by both of these type of
I do agree. Yes, I think the microfinance is there for a reason, and it has an ethical point also why it exists. And I don't see that crowdfunding platforms can seriously answer this at this point. They're focused on other things. So this could very well be a good partnership. And we know of crowdfunding platforms, of course, that have an impact focus, that try to operate within the microfinance field or close to it. So I think these opportunities that are there. But as all of these kind of combinations, they will cost money and time, and you need to find the right partners that are willing to do this. And I assume that most crowdfunding platforms that will opt for this regulation will have to at first want to make sure that this works for them before they will start moving into a new area, and then let's test how we can support microfinance. But I think that opportunity is there. I don't know if I have a few examples here. I can quickly go through there also just to see where there's real differences. We have a French platform here in French. Okay, I couldn't read the question that just came.
I'll read it out loud. Is it correct that the crowdfunding platforms cannot anymore be investors of its own projects? For example, cannot retain any risks?
Yes. So under the new rules, crowdfunding platforms themselves cannot invest. Their staff can, but it needs to be disclosed on the platform. So if now one of the founders is investing in some transaction, it needs to be disclosed. One of our staff members has invested here. We don't know if this is good or bad, but this is how it is. So the platforms are completely removed from the transaction, to the degree that potentially even the management and ownership of a special purpose vehicle in the investment structure may not be possible. This is clear. It's a broker dealer. It's really enshrined in the law to ensure that there is no conflict of interest. Just here we have a French platform that does lending to business, but slightly smaller business. It's in French. Unfortunately, they do it in French or German. So I went for French. The next one, I have something in German. But so here you 3 steps and you get your money, right? So you demand your money. That's you set up your account. It's 1 minute. You have to supply some information. You probably do this in the evening after the news on your tablet. You wait 48 hours. You get the money. That's basically the 3 steps they say how you get investment. Who do they finance? Just see third line. Yeah, you make 250,000 euros a year already, so you have a business. It's not a startup, and you exist at least 3 years. So if you have these requirements, then you can approve. Then you can go for a loan, and you may not get it, but there's a likelihood. The interest rate, the platform will tell you. Yeah, that depends on your risk profile and everything that they come up with. So here again, it's just very quickly. You submit the information of your enterprise, the identity, how much money you need, the type of financing, what you want to find, and then that's all you do. Yeah? It's 5-6 steps of filling in. You need to enter and log in to fill this in. So that would be then past the paywall. This is all public. So it's basically you have 5 steps to fill in your request. This is really quick. Yeah? This is why they work with companies that are, they do revenues. They are not startups. And how do you invest? Also 3 steps. 2 minutes and you have created an account. You choose where you want to invest in, and then hopefully you get your money paid out. This is how you become an investor, and this is how you raise funds for a small business. If you can raise funds within 48 hours, even if it is 72 hours, this is likely very much faster than going to your bank, where you first have to make an appointment, which is probably much more attractive than an MFI if you fall into this clientele. Yeah, there's platforms that take smaller ones as well. Here you have it in German only, because in Germany, crowd lending is heavily regulated under banking license. So the platform said, we are not going to do this. This is German, and it basically says we help institutional investors. In Germany, only institutional investors can invest on this platform. They operate a fund on the side. They have received money from the EIB, and or the DIF, one of them, and they have hedge funds and others co-investing so that they can actually deliver the loan within 48 hours. So here we have a I think it's a different level to what MFIs do right now, and that's maybe not compatible, but you can see where this can lead to and where the attractiveness becomes because you have reach. They were operating in 4 countries. Sure. And I have one other example here. It's called Investor.
Yeah, just one notice from my side. Unfortunately, as a host, I need to say that we've exceeded our time for a minute right now.
Very good.
But we can go very quickly go with this example. If you just
Here, I just wanted to show here you have individual investment opportunities. You look at them and you see, oh, this is where I want to invest now. Yeah. And you see the amounts, price per share, 22 euros. So it's very, very little. But you also see how much money they try to raise, up to 4 million euros, 3.5 million, nearly 3 million. So these are quite big transactions. This is a Finnish, German, Austrian platform. When you say, I want to invest, the minimum investment here, price per share, 22 euros, or that's the minimum you can have. This is what they've already reached there, 1.7 million euros. You click invest now, you already have an overview of what this is about. It's an equity offering. There's an amount of equity that they offer. There's the number of shares they do, pre-money valuation, and so on. You may not agree with what they offer, and then you don't invest. But if you think this is relevant for you, then you invest. And then that's basically here where you go in. The next step, I want to invest. You choose the amount of shares that you want to invest. You click submit your investment. On the bottom in the yellow box, you have the warning, this is dangerous. Yeah? So that's KYC. They will have, if you register, you will have to fill in a few more information, of course. And that's it. And here also financing with them. Request funding immediately, it says on the bottom, right? I mean, you're not making an appointment. You say, I want my funding now. You click on it and it goes quickly that you go through this whole process. It's non-binding. You enter all your data. Immediately you have a chat on the left-hand side that says, hey, can I help you? And you see, you request financing now. You get a financing offer. There's no collateral needed from you. You have varying interest rates from as low as 2.5% that you may have to pay. And there's terms for the investment between 12 and 72 months. That's all there. And then you go further and you fill in your information, and then that's basically how you get there. Consulting call, you see, they will talk to you. This is type of equity investment that they do. They will give you feedback, and then your campaign will go online once you have submitted all the information. This will go fairly quick. There is no face-to-face contact. So that's it. I just wanted to give these examples as well so that you see where crowdfunding clearly still differs from microfinance, and where I don't think microfinance has to be like crowdfunding, but where there is probably a good number of opportunities for MFIs to learn and also to cooperate, be it raising funds within crowdfunding platform for themselves, but as I said, potentially also for their portfolio. And for some MFIs, it might even be an option to look at that regulation.
Thank you, Oliver.
Yes.
We actually have one last question in Italian. Well, yeah, about the presentation. Yes, we are going to share the link to the presentation after the webinar. And another question just pop up. Hello, I have a question. What actions EU crowdfunding platforms take or offer when the borrower or fundraiser is in default?
Yes, that is a good question. So the risk lies with the investor. For sure on the investment side, so equity transactions, that's your risk. On the lending side as well, but there is a possibility to create a fund for the platform that would cover non-repayments. And in the past, it has been done as well, but it doesn't have to be. So here you need to go back to the idea. The platform is not the investor, it's a broker. It brokers a relationship. The moment where you do portfolio management, you are no longer a broker-dealer, then you will have either a relevant insurance policy that covers this, or you will have a fund and can ensure that the money where you have to repay it is being repaid. But this is also set out in this regulation. For now, most platforms will not offer this portfolio management. I think this will come a little bit later. And then the risk is with the investor, and the investor can step back from his contract as well. Once you sign it, you have some period before you fully enter into it. So there's consumer protection. But this is clear. You saw the warning. It is, or it can be risky, and so that is basically not the responsibility of the platform. Having said that, you survive on your reputation, and a platform that has many delays or delinquencies will not have success in the long term. Yeah.
Okay.
Cool.
Sounds reasonable. Thank you very much. With 7 minutes over the time, so
Very good.
thank you very much, Oliver, for your time. Thank you. Thanks to all participants. I will send a follow-up email to everyone with a link to our evaluation form, and also with the link to the presentation used during today's webinar. And I encourage you to visit our website. You can share or watch or share the videos of the webinar later on. So thank you very much, and have a nice day, all of you.
Thank you all. Take care.